Connecting. Okay, people are jumping in again. Very good. Welcome everybody to our keynote speaker, Solomon Tesfaye of T0. He will be speaking about enabling private market liquidity through digital securities. So thank you, Solomon. Please take the stage.
Excellent. Happy to be here, and thank you all for joining. As you mentioned, today I'll be talking about enabling private market liquidity through digital securities. Just in terms of introduction, I'm Solomon Tesfaye. I'm the Vice President of Business Development and Capital Markets here at T0. My background is primarily investment banking at Citigroup, where I was covering diversified industrials, doing M&A, IPOs, private placements. Before that, venture capital, seed stage investing at K4 Capital in tech and healthcare, and I've held a variety of operational roles within tech and healthcare. In short, T0 is a private market secondary platform that enables private securities to trade on a continuous basis. So we could privatize or securitize rather private equity, soon to be able to digitize private debt, as well as royalty streams. And really we allow them to trade in a public-like manner on our alternative trading system. We've assembled a deep team of both technical and financial talent to really bridge this gap in terms of applying this technology in a compliant manner across the private markets. So as you can see from this quick snapshot of our leadership, a lot of these blue chip companies, we thought it was crucial to bring in traditional capital markets professionals into the fold so that they can actually identify compliant applications of all of this innovative technology. So why exactly are we digitizing private assets? Right now, there's a significant delta between the private markets and the public markets. There's 2 times more capital deployed in the private markets, yet there's 330 times more liquidity in the public markets. So there's a significant efficiency gap, if you will, that we're trying to address. Additionally, IPOs have gone down 50% since 1996. If you set aside SPACs, this recent uptick in SPACs, and a lot of just assets just don't qualify to actually go public, and ongoing costs are quite burdensome and ongoing disclosure. So if you contrast basically the current private markets landscape and what we view as the future with digital securities, right now, if I'm a fund manager and I have an LP, actual limited partner who's looking to get out of their position, there's a lot of friction involved. One, just the paperwork regarding the legal. 2, it distracts me as the general partner to actually have to focus on giving that individual liquidity. Typically, they'll have to sell their position at a discount to the net asset value. So they're not also pleased with that transaction. And also they have to typically get an appraisal because there's no efficient marketplace to do so. And then from an investor perspective, that lack of liquidity also makes them require a higher return. So it's a higher cost of capital for the issuer themselves. And they know, as I mentioned before, that they most likely are going to have to sell at a discount if they have a minority stake position within that private asset. So in short, currently there's a lot of friction to actually move out of a private asset, whether it's a private company, a private fund, real estate, as opposed to a digital securities, by actually digitizing this particular position or basically all the equity within a private asset. We actually eliminate that friction, so you're able to trade in and out of private assets as simply as you trading in and out of Tesla shares or Apple shares. So currently, the digital security market growth rate, even though the total size of the industry is definitely at its early innings and at early stages, it is growing rapidly. So if you, on a year-over-year basis, when you compare the aggregate digital security market cap from 2019 to 2020, it's increased 6 times. And then from a volume perspective, it's increased 12 times from 2019 to 2020. And at this point in time, the actual liquidity concentration is quite high, given the fact that here at T0, we actually have over 95% of the global liquidity within the space currently. So the best way to understand T0 is really just a quick overview of the org structure. We basically separate the business into 2 parts. One is the technology part. So we have proprietary technology to digitize or tokenize an asset in a compliant manner. And we've done this for both public and private securities just to show it's kosher across the board. And then also we have multiple broker dealers, since naturally we are a regulated business and these are securities, but we're uniquely positioned to actually allow for greater liquidity within the space. So from left to right, we own SpeedRoute, which is a routing execution broker dealer that we acquired. It was operational for 10 years before we acquired it. It routed about 30 billion shares last year of public traditional equity. But the reason I mention this is because they have connectivity to 150 broker dealers. So we don't have to create liquidity completely organically. We get those broker dealers such as D.A. Davidson, Piper Sandler, and whatnot to subscribe, basically connect to our private secondary market platform, which is the T0 ATS, the T0 Alternative Trading System, where we trade private securities. Every time we connect a new broker dealer, they bring in hundreds of thousands, if tens of thousands to hundreds of thousands of investors into our ecosystem instantly. And then also we have the T0 Markets, it's a retail broker dealer. So if investors want to start accounts directly through the T0 experience, they can do so, and then they would go through AML, KYC, and then enter our ecosystem and allow them to trade. So we have a multi-pronged approach to actually facilitating liquidity on the platform. And that's what's allowed our liquidity to grow so rapidly on a year-over-year basis. And then we also have a crypto business that's currently bifurcated from the securities business that's been growing rapidly, but we do plan on converging these two to allow for an individual that has Bitcoin to move into, let's say, private real estate in a very fluid-like manner. And so in terms of institutional connectivity, this is another area where I think we kind of set ourselves apart. And that's just because we own a number of broker dealers. And I touched upon it in the previous slide. We have already connectivity to approximately 150 broker dealers. So that broker dealer also utilizes the T0 technology. So all of our technology has also been tested at a very high scale. So digitizing private securities, seems quite intuitive, and just more efficient in terms of movement and flow of value. But just to walk through some of the clear value propositions to digitizing any private asset is one, naturally, there's liquidity. That's the most apparent advantage. If I invest in a private company, typically I have to wait for some type of liquidity event, an M&A or IPO event to get my money out, or someone has to buy me out. But really, my options are quite limited just because there's really no efficient marketplace. It's mostly bulletin boards at this point. And then customizability. Well, one, it's not just you actually allowing your equity to trade on the platform. We can also set up guardrails. So if you don't want an activist investor to buy more than 10% of your equity float on our platform, we can set that control in place so no one can go above that certain threshold. Or if you don't want any investors outside of certain jurisdictions to see your private ticker, by all means, we can facilitate that. So whatever you can articulate in your offering documents, we can enforce on a regular basis. So at a baseline, ensure that everything's compliant. But then on top of that, we can offer tailored liquidity. So even if you're a pre-unicorn, a unicorn name that just doesn't want to trade openly, you can also offer a sandbox to your current investor base to allow them to trade amongst one another. And then there's efficiency. We automate all the compliance. So whether it's the dividend policy, whether it's just ensuring that if it is only allowed to be traded amongst accredited investors, ensuring that that is the case, or if you want it to trade openly, or in terms of just investor communication, all these things are automated now that you've digitized your private asset. And then access, because it is trading on a continuous basis on our marketplace, also there's just more investors that have access to it. So whether it be retail accredited, whether it be international investors, you now have access to a much broader investor pool. And then I touched upon some of the points on the previous slide, but there's a number of advantages for both a private company and investor. From a private company perspective, if you are doing a new capital raise before you come onto our platform, for example, it can reduce your cost of capital, because now investors, if they have some line of sight to liquidity optionality, they're not demanding as great of returns because they put a premium on that liquidity optionality. So it can reduce your cost of capital. Additionally, I'm more inclined to deploy more capital in an asset that is liquid, or giving me liquidity optionality as well. So also just raising the capital, it should act as a catalyst for raising the capital. And then from an investor perspective, there's clear advantages of liquidity in terms of access. And so that from the investor perspective, there's also many clear advantages that I won't be repetitive from what some of the ones I talked about in the previous slide. And then I mentioned you have the option of trading broadly or offering restricted trading. So depending on how broad of an audience you want to allow to enter your cap table, we can facilitate and set up those guardrails appropriately. And then in terms of the two scenarios we tend to deal with here at T0, one is the direct trading scenario where an asset comes to us with a more fragmented ownership structure, and they're simply looking to give those investors an option for liquidity. That's a very straightforward process, no capital raise involved. If all the due diligence is in order, that's a 4 to 6 week process to get them on the platform post formal due diligence on that asset. Then there's option 2, where the asset, the individual that owns the asset or the executive team is determined to actually do a capital raise ahead of onboarding onto the platform and have that portion of equity or their full amount of equity with the addition of that new capital raise trade on our platform. And so at that point, the timeline is really dictated by how long the capital raise takes and if there's any applicable lockup periods on that capital raise. But in that scenario, essentially, you'd introduce a placement agent or an investment bank, or the issuer would be doing their own capital raise ahead of actually allowing it to trade on our platform. And we'll go into a little bit of detail on both these scenarios. Option 1, it starts off with if you have a fragmented ownership structure, let's say the asset that has 10 investors or limited partners in it, we would start off with doing formal business, legal, and reputational due diligence on that particular asset, and then giving that asset some foresight regarding what the disclosure requirements are on our platform, semi-annual and annual disclosure, unaudited financials, some basic information that you most likely were already providing your limited partners. And then after the due diligence process, we move you to actually digitizing or tokenizing that particular asset. And that's where we get a better understanding of what tailored preferences you have around restrictions, or if you want to just maximize liquidity and trade broadly. And then we would onboard you onto the T0 ATS, the private secondary market platform, assuming that all lockup periods are expired if they're applicable, or if depending on how you're doing your capital raise, there may not be a lockup period. And then once you're live in trading, then we offer lifecycle management for both the issuer as well as the investors. This full process is about 4 to 6 weeks, assuming that all the material that we need to actually review the asset is readily and available. The option 2, this is the one that involves a capital raise before you come and trade on the platform. That looks very, very similar, except the capital raise component on the front end. That's really just we work in parallel to that capital raise, typically get engaged quite early, just because in terms of reviewing their offering documents, we make sure that there's no verbiage such as transfer restrictions and whatnot that would prohibit the secondary trading of any particular asset. And I'll go through each of these steps in a little bit more granularity over the next couple slides. So step 1 in this scenario is basically identifying the asset, whether it's an individual building, whether it's a subsidiary of a company, whether it's a parent company. We essentially ensure that one, the asset is going to be conducive for secondary trading, because naturally not every single asset may be appropriate to onboard onto the T0 trading system. So we do an initial review, and this is more of a conversation with any issuer. We're working with a number of asset managers that have a broad portfolio, and so they naturally want to have an asset that they think will be most conducive for secondary trading. Then there's the structuring. If it is, since in this scenario there is a capital raise component, typically we're dealing with a lot of just equity, preferred equity in here at T0, but we're seeing all kinds of unique structures, whether it's tokenizing royalty streams or offering more fixed income like products like preferred equity with the minimum dividend policy, or maybe just be a growth appreciation play. But we naturally will also, if there's an investment bank involved that's leading the primary issuance, we would also defer to them in terms of what they think will be most attractive from a private placement perspective. And then there's the raising capital itself. I won't go into too much detail about this because naturally your counsel and your investment bank or placement agent will also help dictate this. But depending on which private offering type you conduct, that will dictate also how quickly we can onboard it onto the platform. So for example, we're dealing with a lot of Reg D 506Cs. It's on the left. where they're doing a Reg D 506C, and then the soonest we could trade it is after 90 days amongst accredited investors only on our platform. And then after a year, we could allow retail investors to also trade that particular ticker. And then if they're doing, let's say, a Reg A, for example, that now can go up to 75 million max in terms of its capital raise, there's no lockup period, and retail investors can get involved in the primary and immediately start trading after it closes. So these how you go about a capital raise really dictates, just in terms of from a regulatory perspective, how soon we can facilitate secondary trading. And then after the capital raise, if we're providing the tokenization, we would be the ones that distribute the actual digital securities to the respective investors that participated based on their allocation, and then onboard it onto the T0 ATS for trading on the platform. So what type of assets are we looking for? At this point in time, we're really looking for assets that are, one, nationally high quality assets. We're industry agnostic. We're dealing with everything from real estate, industrial, funds, healthcare, tech. We even have some teams that are evaluating whether they're going to onboard equity to get fan engagement, and then also some more esoteric assets, whether it be collectibles, art, and so forth. But really, we are looking for assets that typically are as close to 10 million of equity as possible, because we want there to be a certain float size on the platform. And then if you are looking at the direct trading scenario I outlined first, then we would look for more fragmented ownership structures so that it is conducive for direct trading onto the platform. But we are always happy to review any potential issuer. Our initial due diligence is all done before any formal engagement, so it's completely free. So feel free to reach out at sales@T0 if you have any questions regarding whether you think you have an appropriate asset that may be conducive for continuous secondary trading. And just to give a quick overview of a recent asset that we onboarded, the St. Regis Aspen Resort, which is a marquee luxury resort that was built in 1992, actually did a capital raise, a Reg D 506C, at the end of 2018. They came to us middle of last year, and they want to give basically a portion of their equity holders under an SPV, liquidity optionality. Most of those investors were from Southeast Asia, and they wanted us to fractionalize it. So when they did their initial capital raise, it was a $100,000 minimum equity check. They wanted on our platform, after they did another appraisal, pre-COVID appraisal, they wanted each share to be worth $1.25. So each digital security to be worth $1.25. We onboarded this asset to trade on the T0 ATS. It went from 14 investors originally to now over 550 investors since it's been trading on the platform. So this is a clear example of really democratization of access to this particular tier 1 resort. And it is worth noting, throughout COVID, it's actually traded for the most part at or at a premium to its pre-COVID valuation. So there definitely appears to be some type of liquidity premium that it's received by trading on our platform. So T0 offers continuous liquidity rather than one-off recapitalization. So public-like trading for private assets. It increases the investor pool in which now have access to any particular asset. So it's attractive from an asset owner perspective, given the fact that they're able to reach a broader pool of investors. And then from an investor perspective, because now they have access to more elusive assets and can diversify even further, and it makes the minimum equity check much lower through fractionalization. And also there's just lower cost of transaction by trading on our platform, as opposed to the friction that occurs in the private markets, which leads to additional fees in the traditional private markets. And as I mentioned with the St. Regis Aspen, since it was a direct trading scenario, because by the time they came to us, they were no longer looking to do a capital raise with an investment bank or placement agent. They were looking to simply onboard existing investor base. It was a very, very fast process. It really, by the time they engaged with us to the time they were trading, we're talking about approximately 5 weeks. And with that being said, I'd like to open it up for questions. Thank you for all your time.
Thank you, Solomon. That was great. Yep, you're getting claps. We have some questions in the Q&A. We have Klaus who's asking, do you see any future integration or interaction with the DeFi? Oh, okay, now it jumped. Sorry. With the DeFi ecosystem for T0?
Absolutely. We are definitely constantly evaluating that. Naturally, our legal team and our compliance team have been working with regulators closely. Just given the fact that we own 3 broker-dealers, we just have to have clear guidance on any of that space. But we love the developments that are happening in that ecosystem. So we have a pulse on it, and we have regular dialogue with a lot of the key players within that space. So absolutely keeping a pulse on it. Right now, we've been focused on interoperability. So as liquidity grows on other platforms, if you will, because right now the liquidity is quite concentrated, we are looking for dual listing. All the tech has been built so for dual listing capabilities, white labeling capabilities, interoperability. Whether we tokenize an asset or a third party tokenizes an asset, we're happy to host it on our platform as long as we like the asset. So we're really not trying to be a walled garden, if you will. We're actually trying to make sure that we're interoperable as much as possible.
Okay, very good answer. If Klaus has a follow-up, he can write it in the Q&A. Then Henrik is saying, I get that asset owners, developers, and entrepreneurs see tokenization as an efficient means to access liquidity. But how do you see the ecosystem, the secondary market opportunity for those tokens versus as collateral in lending protocols?
Yes, so if I understand the question correctly, essentially, how's basically the secondary market platform or secondary demand, if you will, developing? And we've actually been seeing that develop very, very nicely. Reason being is, a lot of the big banks and even the middle market banks, for the most part, also facilitate a lot of transactions, private transactions for their clients. And right now, they even experience a lot of friction when they're trying to move one of their clients from private position to hand that off to another LP. And so we're in contact with a lot of these facilitators of those transactions in terms of being the backbone for those transactions. And so not only are the smaller investors experiencing friction when they're actually trying to get out of a private investment or get into a private investment, but also even the larger banks that are trying to facilitate for their LPs transactions between real estate and so forth, they're experiencing some of the same issues in friction. So really it's the infrastructure that needs to be improved, and this really provides a solution for both parties.
Okay, moving on, we have a question from Alok. Yeah, you're getting a lot of thumbs up. Good answer. How many listings do you currently have on T0, and how many of those were onboarded in the last 6 to 8 months?
Yeah, so currently we have 3 securities on the platform, which makes up the majority of the market cap globally. And then we have a pipeline of about 200 plus issuers, half of which are in the US, half of which are abroad, and at different stages of the actual pipeline, if you will. But the direct trading focus that I mentioned, option 1, is where our focus has been, because historically the industry has really been focused on issuers that are doing capital raises. So we were at the mercy of the capital raises, and COVID did not help these capital raises. Most of them got postponed, and then now they're starting back up. So the direct trading scenario, where we're simply tokenizing or digitizing existing cap tables, is a much more predictable process. So right now we have a number of very near-term assets, 2 of which we actually announced, I believe, a little earlier this week. Exodus, large crypto wallet provider, just raised $75 million. They intend on being on our platform. They also LMX, Liquid Mining Fund, an actual energy fund, a Bitcoin energy fund, is actually going to be on our platform. And we have a couple others that we anticipate announcing over the next coming months. But right now, we're very pleased with how our pipeline is developing, and also the sophistication of the issuers in our pipeline. We're dealing with what we call also serial issuers, where they're asset managers that have a lot of assets, that each of these assets have been syndicated individually. So they're anticipating putting on several tickers on our platform. So it's not like an IPO context where they're going public at the parent company level. We have the benefit of being able to form a relationship with a venture capitalist or asset manager, and that leads to multiple different assets that come onto the platform.
Okay. Well, we are almost out of time, but you are joining us for the panel in a few minutes. Yeah?
Yes, I am. Looking forward to it.
So everybody who didn't get your question answered, please ask them again in the panel. And I will see you over there in about 2 minutes. But first, a quick, can you stop presenting your screen?
Absolutely.
Yeah, so first we have a quick word from our event organizer. See you all over there in 1 minute.
The real estate industry is plagued with paper-based, time-consuming, antiquated processes. Only 7% of global real estate is available to investors, whereas 80% want to invest. Real estate is extremely illiquid, and investors are usually stuck with their investments for many years. DigiShares solves these problems with our blockchain-based tokenization platform. We help real estate developers and asset managers digitize and automate their processes. They can reach new types of investors and allow their investors to trade. Our platform gives any asset manager or real estate developer full control over financing and management, both for asset sales and new development projects. Real estate-backed tokens can be issued, sold to investors, or traded on the platform. This extreme degree of automation provides high efficiency and low cost. DigiShares allows asset managers to fractionalize, giving smaller investors access to real estate. The result is democratization and equal opportunity access to wealth, both key visions behind blockchain technology. Tokens issued from the DigiShares platform are usable within the entire blockchain ecosystem. They can be traded on exchanges, stored safely with trusted custodians, or used as long-term collateral for DeFi lending. Best of all, DigiShares platform doesn't force real estate investors to use crypto to invest and trade. We provide on-ramp systems where investors can deposit and withdraw dollars and other currencies. While the platform uses blockchain to automate transactions, we don't impose it on our users. Contact DigiShares if you want to get full control, reduce administrative cost, and offer many new functions to your investors.